We are back. It's October 6th already, and this is our weekly update. How you doing, Gary?
Good. What's happening?
Gary's down in Texas. I'm here in California. A reminder, smash that like button. Smash it. Make sure you subscribe. We do this every Monday. We pump out a bunch of other content as well. Very appreciative for everybody that tunes in. But let's talk market update, Gary. What is going on? The government is still shut down.
Yeah, some would argue that they were never open, but I didn't say that out loud.
Yeah, I mean, not much has changed.
I don't think much has changed.
No.
Yeah, we're almost a week in, and so no real ripple effects on our side as far as the rates are staying about the same.
Yep.
Not a lot of movement there. That's kind of to be expected. And the big reason is because all of any of the government reporting is shut down.
Yep.
So there's not going to be any data coming out that is from the Bureau of Labor and Statistics. They're on the out. So we don't have any data come from them. There is obviously other economic data points that can be used, but the big ones that are driving things, CPI, PPI, jobs reports, that all come from the BLS. That's until further notice are off. So obviously other things can move the market, but for the most part, we don't really see anything that's going to move it in a meaningful manner one way or the other at this point.
And historically, I did a video on this a little earlier. Historically, investors during a shutdown go to government equity funds and look at, treasury funds and treasury bills. So that has some impact, but even historically, it hasn't been a big needle mover. Down somewhat, but not really something like, oh, this is the major reason it's doing so.
Yeah, I mean, we're still, as far as rates are concerned, we're still in that low sixes to mid sixes range. We're seeing as, kind of low as 6 1/8, 6.125 to 6 3/4, 6.75, depending on the scenario, right? Like obviously a lot of factors go into that, credit loan amount, things like that. But yeah, you're still in that low to mid sixes is probably fair. FHA stuff is going to be a little bit lower. They're going to be in the fives. So yeah, I mean, there's still, the one thing I'll say as far as market update is concerned, and this has been kind of the ongoing theme all year for the most part, is the deals we're seeing come in are good deals, meaning that, buyers are getting a lot of their, they're probably getting the house bought at a little bit at or below market, and they're getting seller credits. And that is huge, right? Like you can take $10,000 off of a $400,000 loan over 30 years. It's kind of a nothing sandwich. It's great. You got a better deal and you're not paying $400, you're paying $390. But where it really impacts folks today is in their back pocket. Heck yeah. And so, if you can I would gladly take $400,000 on the purchase price and get $10,000 in seller credit, because that means that's $10,000 less I have to show up with.
Yep.
So
yeah, it's the consensus here is people are, the open houses, the realtors I talk to, they're getting traffic. It's normal for this season. We're in October. We're we're heading towards the end of the year, so it's not the hot season for real estate. But they're pulling back, just uncertainty. It's not a rate discussion anymore. It's more of I don't want to tie up that much cash, and so seller credits are becoming more common because sellers want to move the property and buyers are hesitant. It's a good little prod to get moving and access some cash to cover those costs.
Yeah, I just think it just makes from a buyer perspective a way more attractive deal. Yeah, when you can limit that cash out of pocket, because there's all those expenses that are, you don't know when you walk into a house. You buy the house and you're like, okay, I got the house, now what? Yeah. And you sit down with your spouse and the next thing you know, you're ripping out,
throwing a new
new roof, you're putting in a patio, or, all these things. And you're like, oh, that 10 grand might have been pretty handy to have, for those projects.
So given the government shutdown and the economic data not coming in, do you think that puts any future rate cuts at risk?
It could make the Fed sit on their hands for the next meeting, just because they don't have the data, which, Powell has from the outset says that he's making those decisions based on the data. So without that data, that definitely could give them a reason, or where they feel they don't have enough information to make a change in the rates. No rate cut. For this next one, let's look it up. Let's see what they're predicting, if that's
and then
changed.
Also for people that are concerned that the government shutdown would have an impact on their ability to close on a loan, we're not seeing any delays or any issues with that from that regard.
No, we're not seeing anything. I have read the USDA stuff, not necessarily the housing stuff, but I need to research that a little bit more. But we are seeing some government loan programs are being impacted. But as far as housing, I haven't seen anything on the housing side. Definitely not conventional.
Yeah. Yep. Business as usual.
Mm-hmm. Yeah. So they're still predicting a 94% rate cut on the Fed watch tool.
A 94% chance of a rate cut.
Yes. Sorry.
We're not cutting rates by 94%.
Yeah. Sorry.
Newsflash. Pure Funding reports a 94% rate cut.
Yes. That's a very good clarification. And that would be 25.
We're not into clickbait, Gary. We don't do clickbait on these because I know what
we need all the views we can get. We need all the views we can get. Yeah. So 25 basis points, bringing the Fed funding rate between 375 and 400 basis points.
All right. Well,
there you have it.
Let's get the government back to work. Market softening. Still a good time to look at accessing the equity in your property, get rid of some high interest debt, get your mortgage plan in place. Even if it's not your ideal rate right now, let's understand where you need to be, what the numbers look like, so we can get you set up for success when we do get there. So that's it for this week. This week's update. We appreciate you taking the time to listen. Gary, thanks as always for the knowledge. If you hear any more news about a 94% rate cut, please let us know.
I'm here with all the good news.
Have a good day, everybody. We'll see you.
See ya.